Rivian's drastic 9% stock dive. Are your investments at risk of becoming obsolete? UBS has just rung the alarm bells on Rivian's prospects, shaking investor confidence with a sell rating. The staggering reality? A $4 billion cash drain and diminishing enthusiasm around AI advancements in the EV space. This is not just financial jibber-jabber. These staggering figures are reshaping the investment landscape. Rivian's recent 9% nosedive isn't merely a news headline, it's a seismic shift rippling through the electric vehicle sector. Here's the part nobody's talking about. So what impact does this have on long-term portfolios? What strategic moves must investors consider? Stick with us as we dissect these pivotal numbers, because every insight we uncover may influence your financial decisions. Rivian, a firm once held in high esteem within the electric vehicle (EV) community, now finds itself at a crossroads as financial pressures mount. UBS's recent downgrade has sent shockwaves throughout investor circles, raising questions about Rivian's future. Why such a bearish outlook? It all boils down to an alarming cash burn estimated at $4 billion. This is not merely a statistic, it's a warning siren signaling deep-seated challenges. Here's the part nobody's talking about. As Rivian battles the dual fronts of waning artificial intelligence excitement and financial strain, many are looking toward its much-anticipated R2 SUV launch as a potential savior. However, is it capable of generating sufficient momentum? Amidst these challenges, you might wonder what the company's strategic partnerships mean. Take their ambitious $1.25 billion alliance with Uber, designed to revolutionize the future. But wait, despite such endeavors, investor confidence remains on shaky ground, teetering on the edge of uncertainty. And here's how this energy move ripples into the broader market. Now, turning our attention to the numbers, Rivian's stock price is currently hovering around $15.86, a minor increase of 0.57%. While this slight uptick might seem reassuring, do not be fooled. The recent 9% plunge signifies a deeper, more concerning trend. Analysts are expressing caution, and the market is beginning to reflect Rivian's daunting cash burn and the fading allure of AI within the automotive sector. A question arises: why was no preventive action taken earlier? Here's the part nobody's talking about. Perhaps the existing incentives discouraged proactive measures. With a market capitalization almost reaching $18 billion, Rivian's financial endurance is in question. The pressing issue is sustainability. How long can Rivian maintain this precarious balance without significant reforms or innovations? The introduction of Rivian's R2 SUV was hailed as a potential game-changer, marking a strategic shift from exclusive offerings towards more accessible mass-market options. Alongside the R2, Rivian plans to launch two additional models, the R3 and R3X, both priced under $50,000, aiming to capture a broader demographic. What truly spices up the narrative is Rivian's so-called AI revolution, reportedly attracting over $1 billion in investments aimed at redefining automotive technology. Collaborations with industry giants like Uber and Volkswagen have been seen as a strong endorsement of their vision. Yet, the unavoidable truth remains. Rivian's escalating cash burn is a formidable challenge. Here's the part nobody's talking about. The company's $1.25 billion deal with Uber to deploy autonomous vehicles by 2031 is ambitious and forward-thinking. However, can these partnerships effectively counterbalance the pressing financial burdens Rivian faces? As we delve deeper, the stakes are significantly heightened. Rivian's future teeters on the edge, where triumph and catastrophe are just a decision away. In stark contrast to its competitors, Rivian's position is precarious. Tesla, for instance, continues to dominate market share, showcasing resilience and growth, whereas Rivian grapples with these challenges. A detailed analysis of the sector's heat map reveals Rivian's pronounced vulnerabilities. While Tesla's stock flourishes, Rivian remains an outlier, struggling amidst a generally upward market trajectory. Yet there's more than meets the eye. Here's the part nobody's talking about. Rivian's potential wildcard lies in its strategic partnerships. These alliances could very well be the lever Rivian needs to regain competitive ground. The pivotal number here is $1.25 billion, the quantum of Rivian's bet on future success. Will these strategic collaborations pay off in a fiercely competitive landscape, or are they merely another layer of risk? The landscape Rivian navigates is fraught with risks and uncertainties. Investor confidence is on a knife edge, exacerbated by Rivian's substantial cash burn. There's a high probability of continued stock declines as analysts adjust their forecasts and reassess future growth prospects. An unexpected twist in this narrative is the decline in AI hype, which Rivian is currently grappling with. This downturn could prompt a reevaluation of Rivian's long-term growth potential. Here's the part nobody's talking about. These aren't mere hypothetical scenarios. The financial metrics supporting them are very real. For those keen on smart investments, this situation demands vigilant attention. Rivian's future is precariously poised, balancing on a fine line between potential resurgence and precipitous decline. Investors should prepare for a potential recalibration of expectations. A storm may be brewing, and the fallout could be significant. Although the current scenario presents considerable challenges for Rivian, a surprising turnaround could still be on the horizon. If Rivian's strategic partnerships are executed effectively, they might mitigate the intense cash burn that threatens the company's fiscal health. Here's the critical insight. Rivian's path to achieving profitability is laden with hurdles, but it's not insurmountable. For those with a long-term investment focus, patience could be a critical virtue. The EV market is inherently volatile, yet it is filled with opportunities for innovation and growth. Here's the part nobody's talking about. Rivian's technological advancements could play a pivotal role. As an investor, your portfolio should ideally balance caution with an openness to emerging opportunities. So what's the next strategic step? Keep a keen eye on Rivian and remain informed about the evolving market dynamics. In conclusion, Rivian's pronounced stock plunge serves as a crucial wake-up call for investors. My investment verdict is cautiously optimistic. The long-standing open question seems clearer. Strategic partnerships may indeed be Rivian's lifeline in navigating these turbulent waters. Yet the persistent issue of cash burn presents a significant risk, signaling a potentially hazardous trajectory. For discerning investors, continuous vigilance and informed decision-making are paramount. Here's the part nobody's talking about. Rivian's trajectory is a crucial indicator of broader trends within the EV sector. Staying informed and adapting to these changes is essential for any investor seeking to thrive in this evolving market. This is the kind of nuanced investment signal most people overlook. Tomorrow, we'll be dissecting Tesla's groundbreaking advancements in autonomous vehicle technology. Whether you're in or out on this train, make sure to subscribe so the detailed breakdown lands in your feed instantly. Don't miss out on this critical analysis from our channel.